Traders, how are you? Marcello, founder of the Day Trading Academy, co-founder of Speed Up Trader. Today we're doing the recap of what happened in the markets last week. Gonna have to do a little bit shorter recap than usual. I'm on the road, I'm short on time, and I'm kind of flying around here. I didn't charge the battery on my camera either, so just kind of Newton's law today. But don't forget to leave your like. They told me that it's helpful with the algorithm here on YouTube. If you guys are listening on the podcast, head over to YouTube as well if you want. Don't forget to leave all the questions with hashtag Ask Marcello there in the comments. I'm starting up that series again where I'm answering all your questions, and don't forget to subscribe. So overall for the week, we had the markets, and this included most global markets as well. We had a bit of a rise in the beginning of the week, then we had kind of a dipping, then we had a bit of a crash, not major, but we had a bit of a dip, and then it recovered at the end of the week. We have a lot of worry now with a lot of different countries and states in the U.S. also opening their economies that we're going to start having a second wave of the coronavirus, and that can start to affect the situation with the economy. We also had some trade tensions with China and the US, and now with a lot of the news that's coming out and the situation with the reopening, it's becoming a bit more elusive, that V pattern in the recovery of the economy. If you guys, a lot of the people in the news, especially in the government, want you to think, well, we had this huge crash, we're just gonna bounce right back, everything's gonna be fine. But that's not the case, especially now that we have a lot more data. I personally believe that we're going to have a bit of a W. So, we had this huge crash, we'll get the recovery, things will start opening again. But then we have a situation where a lot of jobs are really not needed anymore because restaurants have been destroyed. There's been a report that says that they're expecting only 1 out of 5 restaurants to continue being open. United Airlines just announced that they're going to only need about 12% of their workforce. So they have 25,000 employees, and they're saying that they only need 3,000. And the only reason why they're continuing to get paid is because of the trillions of dollars in stimulus that the government gave, right? So they gave the money to the companies to keep the employers connected to the employees, right? Well, what happens when that money's not there anymore? What, the government's going to continue to give money away for free forever? That's not sustainable. So once we have a situation where these kind of people, for example, eventually are not going to have a job, and then the numbers are going to get worse. So it's going to get a lot worse before it gets better, and we're probably not going to see a recovery until next year, in my opinion. The stocks were lower for the week. The Dow was down 2.72%. For the year, it's still down just over 17. S&P 500 is down 2.30% for the week. For the year, it's down 11.36%. And the NASDAQ is down 1.18%, while for the year, it's up 0.47%. European markets were very similar. The SAC in Paris, if that was a French accent, the SAC in Paris went down by 6.35%. Latin American markets also mostly negative. The only highlight there was the Merval in Argentina, which skyrocketed at plus 8.85% for the week. Middle Eastern and African markets, the South Africa markets were down 2.77, which was the biggest loser. And the biggest winner was Saudi Arabia at positive 1.33%. In Asia and Australian markets, mostly lower. Singapore went down 2.70%, while the Philippines market went down 1.44% for all of my traders there in the Philippines. In Bitcoin and other cryptocurrency news, the halving occurred in Bitcoin, where basically, if you guys don't know much about the topic, it essentially means that the rate at which new coins are going to be issued is now being reduced. That didn't cause Bitcoin to have a surge or a rise at all. Bitcoin went down 5.63% for the week, and Friday evening it reached 9,359.81, and it still hasn't reached 50,000 for those of you that were talking about it last year. But don't worry, it's next year. It's always next year. Other than that, in finance and banking news, the European Commission is threatening to sue Germany after Germany's top court questioned the legality of the ECB, the European Commission buying bond program. This is something that I don't know if you guys are starting to witness, that we're starting to have a lot of friction and infighting within the euro. I don't think the euro is going to last the way it is now. It's going to either break up or have a higher form or a lower form, or Euro A, Euro B. And we're starting to see that. The Germans generally have always they've always balanced their budgets, and they always have tried to not have the same situation that they had after the Weimar Republic. In other words, the Germans essentially remember hyperinflation. And they know that this kind of stuff can lead to hyperinflation, which doesn't help anybody, which is what's happening in Venezuela, or what happened in Zimbabwe, where they literally had $1 trillion notes. I still have one of those when I visited Zambia and Zimbabwe. But it's funny, I paid $10, I think $20 for a $1 trillion note. But Germans are very fiscally sound, and for that reason, they still remember. You know, my uncle still tells me about a time where he remembers people telling him how people were exchanging cars for a chicken, right? Because of the hyperinflation. So there's a bit of infighting now between the ECB and the Germans, and this can escalate because now it's not only them, the Italians. I don't know if you guys saw on the news, they removed one of the European flags from one of their major offices in the government. Now it's just the Italian flag. So it's a big fiasco that's getting started. The Federal Reserve, which is the central bank in the United States, which, by the way, is not a public bank. It's actually a private bank, even though they call it the Federal Reserve, in case you guys didn't know that. They're saying that they're not going to take rates to below zero, even though both you and I know that they say one thing and do another, right? The U.S. Fed's secondary market corporate credit facility, say that 3 times fast, is saying that they're going to begin first-time purchases ever of ETFs to be able to have a fast way to direct money into the credit markets. Near 4 million U.S. mortgage borrowers have had their payments paused, canceled, or reduced due to the pandemic of the coronavirus. And the Bank of England in the UK is saying that they may be headed for negative rates, besides the fact that they've had 2 rate cuts and also a new, I was thinking about leasing. I'm thinking in Spanish always now because of the Spanish videos. A new $200 billion quantitative easing in addition to the 645 that they've already had. And that's in pounds, so it's a lot more in dollars. It's close to $800 billion in dollars. Other than that, if you guys want to know the total amount of stimulus that the entire government has given, central banks and governments have given $15 trillion in stimulus to be able to help out the economies during the self-imposed economic destruction that they caused because of the coronavirus. It equates about 17% of the entire global economy last year. And that's all debt. Because obviously debt doesn't matter anymore. We're just going to rack up the debt and, whatever happens, happens. Other than that, in commodities, U.S. crude went up by 18.95% this week, even though it's still down 51.46% for the year. International crude, which is called Brent, went up 4.94% to $32.50, even though it's down 50.42% for the year. And essentially, what's happening is they're starting to do the supply cuts, obviously because of the crash in the price of oil, and it went negative. Remember, I did a video on this. I think I'll upload it. I did it a few weeks ago in regards to why oil went negative. It was literally just one contract. Because if you guys don't know, commodities, futures, they expire every month for physical products. And so just the May contract went negative, even though the June contract was at about $20, if I'm not mistaken. So, and the Brent, which is the international crude, never went negative. So because of that, there's been a lot of destruction in the oil markets. There's been a reduction in production in the United States because some businesses literally can't stay in business anymore. And on top of that, Saudi Arabia and OPEC have also decided to go ahead and cut production as well. And so that has allowed oil to skyrocket. And if you guys don't remember, always remember what Warren Buffett says, even though he hasn't been making the best decisions as of late. Remember that he always said that be fearful when others are greedy and be greedy when others are fearful. When oil went negative and even silver went down to $12, for example, I went in and backed up the truck, right? You should always think that whenever there's a crisis and whenever there's blood on the streets, what do I buy? Because there's always an opportunity, and those are actually the best opportunities as well. Now remember, educational purposes only, right? The feds always like us to say that. Now they're always looking at all the videos that we do. So educational purposes only. Make sure you guys make the best decisions for your accounts. Gold broke through a 7-year high it said just 3 weeks ago at $1,733.40. The historic high was $1,921 in 2011. Gold was up 2.30% from 1703 to about 1,743. Silver went up 7.25% to 1671. I don't know if you guys remember that video that I uploaded about the 40,000 loss that I was holding on to, and what I was going through. It was a seminar that I did, a presentation at the seminar that we have for all of our traders every year. But notice now what I said in the video is there's a mining price for silver, and it really doesn't stay there very long after it collapses, and it literally came right down to 12 a few weeks ago. It literally recovered now. It hit 17 this week, and I was able to close one of the positions I had open for about a $2,900 profit. And so always remember that, you know, even though things seem bad, there's always opportunities, especially better opportunities. You just have to make sure that you find them correctly. In political news, France is summoning Venezuelan's envoy on accusations that Maduro's government is harassing its embassy in Caracas, including, but not limiting to, cutting off the water and the electricity to the ambassador's residence. France obviously is one of the countries that don't believe that Maduro is the president because of the elections that they had, but rather the opposition leader Juan Guaido is his name. Other than that, the U.S. unemployment rate hit 14.7%. Treasury Secretary Mnuchin says that it's probably going to get worse before it gets better. He says that we're going to have a very, very bad quarter 2, even though the next year is going to be a great year. And if the U.S. doesn't open soon, we could see permanent economic damage if the country doesn't reopen soon. And other than that, you know, we have a lot of different news in regards to bankruptcies. Obviously, one of the most important things I see here is a change in consumer behavior. Remember that the U.S. economy is based on 70% of consumer spending, which basically means you and I going out spending money on iPhones and things like that. So even though I prefer Samsung, it's actually what I'm filming on. So let me know how the sound and everything works. And I mentioned to you guys I had those issues with the battery, but the people are now not spending as much money, and they're now saving at a record rate and also paying off their credit cards. So if 70% of the economy isn't moving and people aren't going out and spending money, we're really not going to have that much of a recovery. And I have here noted that they're shrinking their credit card balances by an annual rate of 31%, because there's a lot of fear due to the pandemic. They might lose their jobs, they might not get paid, et cetera, et cetera. And so it's important to realize that that's one of the biggest parts of the economy. And if we don't have that, or it doesn't come back like everybody thinks it does, or it's going to, we're going to have a real problem in terms of a recovery. And I'll leave you guys with this, because I don't have too much time, even though there's a lot more news that I cover with you guys in the week. Everybody's talking about a V-shaped recovery, right? So it's just gonna, you know, the market came down, we're just gonna bounce right back up, everything's gonna be fine. I think it's gonna be more like a W, and I mentioned this, I believe, in the beginning of the video, where, you know, the market's gonna come down, we're gonna start to have the opening and the recovery, things are gonna go up, and then everybody's gonna realize, oh, nobody's flying as much, nobody's buying as much, and we're literally gonna come right back down. So I don't think we're gonna have that fast of a recovery like everybody's saying. So that's the news for this week, guys. Let me know if you guys have any questions. Don't forget to subscribe. Don't forget to leave your like somewhere around there. It's good for the algorithm. And we'll see you next week.